Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. You can see that inflation is going wild. There's no doubt about that. The first thing I need to cover is what's happening exactly. I will show you the ins and outs of the Federal Reserve and their activities. The second thing I want to look at is what are the rich doing as a result of all of this? I will show you that. And the third, we will look at how to protect your wealth, how to accumulate it, and of course, how to make sure it can stay generationally. I've got all of that and more. Let's begin taking a look at the Federal Reserve and their activities as of late. You can see this by going to a search engine. Quite frankly, it is very simple. You type in Fed H41. You don't have to speculate. You don't have to guess. You can actually see their weekly updates. Just type in Fed H41 and it is organized by date, and you could pull up the latest one, and it just shows you that recently it has been approximately flat from the week before. At the time of this recording, the Federal Reserve has said we are going to now increase interest rates at a faster pace, and we are going to most likely begin a balance sheet reduction in about a month from now. So we will see what happens, but at this time, we can look that it has declined from its high and it has started to flatline approximately. So this is always going to vary from week to week, but that's where we are at. You look at the Fed funds rate, which is the interest rate of the Federal Reserve, the most important rate perhaps globally, and this right now is towards the bottom, currently at 0.2%, but this will likely come up in the next few weeks. I showed you 2 times before. This is a 60-second video, and this is a 40-second video, essentially showing how to look at where we will be in the coming weeks and months and years in the stock market using one simple indicator, and that is what are central banks doing? You follow the money, right? Well, I'll talk more about that in a few minutes, but I just wanted to make it clear. By the way, all the links are in the description below. How to do this on your own. It is very simple. I just showed you part of that right now. And if everybody pays attention, they will know what's happening. And it is very clear that the Federal Reserve and the other central banks have started to pull from their quantitative easing, from their easy monetary policies, and this has a negative effect on assets in general. If you look at the broad picture, that's what you see. Surging interest rates push mortgage demand down more than 40% from a year ago. You look at what's happening with credit card usage. So now that the government isn't handing out the stimulus, you see right away a direct response. You look at the credit card usage, it's at a record high. Okay, the amount of money that's being put on the credit cards in this short period of time has accelerated. And you look at this back from 1980 up until the present, we've never seen anything like this before. And this is so key to understand, so important, because if you follow what's happening on a deeper level, you're really going to figure it all out. Trust me, this is so important to look at. During a time period of high inflation, uncertain monetary policy, overpriced real estate, and quickly falling stock prices, it's more important than ever to consider diversifying across asset classes. And listen to this extraordinary stat. According to S&P Global, 94% of fund managers couldn't beat their respective S&P indices. So how does the average investor even have a chance to get better than average returns? You have to look in different places, and something we probably don't talk about as often on this channel is the world of alternative assets. Things like real estate, lesser known cryptos, you get the idea. But one of the alternative investments I'm excited to talk about, and most investors are overlooking, is blue chip art. Art has been quietly outpacing the S&P by 164% from 1995 to 2021 and almost doubles the appreciation of real estate, gold, and 90% of cryptos out there. So why aren't more people investing? Well, it takes millions of dollars to buy a Picasso. So contemporary art has been accessible to only the global elites until now. I'm excited to share with our community and give you the priority access to our sponsor, Masterworks. Masterworks uses over 60,000 data points to find financially attractive works of art, buy them, then let you invest in shares representing an investment in that painting. The results? In 2020, they returned 32% to investors, and in 2021, they returned 31% from the sale of two paintings, one being a Banksy. With results like that, it's no wonder that over 325,000 people have signed up. Just click on the Masterworks link in the video description to get started. You don't have to guess, you don't have to wonder about what happened with the rich and the things that they do in order to protect themselves and grow their wealth. You just look in the past, even the recent past. Take this for example, the Great Greece Fire Sale. So if you were on this channel around that time, you would know all the ins and outs. Perhaps you looked into this yourself. The airports, the marinas, they were getting sold off. What about the Qatari Emir? So the Emir of Qatar buying 6 Greek islands. This is something that you just don't see too often. And I'll talk about this more when I talk about real estate, but it's right here with art. And this is a very illiquid market in many respects. But that's extremely important when we have a crisis. When prices start moving down all around the world and there is concern, that liquidity, like with stocks, like with perhaps some cryptocurrencies, these things can evaporate in seconds. But in certain markets, it doesn't happen this way. So it's really interesting to keep that in mind. So the US, this is a report, an extremely important report as far as art goes, but essentially saying that the US is the top dog. This is the largest single market with sales rising by a third during 2021 to just over $28 billion. Think how much money is moving in a world in which there's really only so many buyers for art. That's the way it works, right? It's very interesting, okay? And these billionaires, they're throwing their money at yachts. What about Jeff Bezos, okay? Massive yacht. In fact, a yacht so big, it has a support yacht. So you put all the toys on one yacht and that one follows around the big yacht, okay? They're living in a different world. But remember this, they're doing things that you and I generally cannot do. But that illiquidity is important. Look at illiquid types of real estate, not the single family home, not a condo, but multi-family real estate. And look at what happened in the previous cycle. That's very interesting because the pricing, the model for pricing of multi-family real estate doesn't work like it does with single family homes. Okay, it is priced based on rent. It is not priced based on comparables necessarily. Very different, to say the least. So let's look at this next aspect here. How do you protect yourself? What's happening today? Well, we need real assets, my friends. But there's always going to be assets that perform better than others, and there's actions that we can take. So if you look at the previous cycle, understand that financial crisis time frame, some stocks did well. And what was it? Discount retailers being the one that I wanted to highlight here. Okay? Discount retailers when at a time in which, a lot of stocks were just down and they were saying everything is going down. Examples, Walmart, Dollar General, because people have less disposable income, their credit card usage is going through the roof, perhaps inflation is going wild. At that time, you had oil prices at over $140 a barrel for a period. I mean, obviously, this is going to impact people in their bottom line. So now they're going to Dollar General. Now they're going to Walmart instead of the other places. But then you have another group at the very top, the so-called elites that are doing something totally different. Okay, so there's two different worlds at the same time, and we must understand both. Investors are seeking inflation hedge. They're snapping up US farmland. This is today. Interesting, right? So while we see prices of food going up, inflation going up, farmland is looking extremely attractive. If you saw what, in the interview with Mark Faber that I did, depending on what time you're watching this video, he talks about farmland and how it is very interesting. I didn't even bring it up, but he's looking at that. And then, of course, we have precious metals. The price of the precious metals always going to fluctuate, but look at what the cultures of the East do. They are buying coins, they are buying high carat jewelry, and they're passing that down generation to generation, keeping it within the family, and it always maintains value. They're not looking at the daily fluctuations or even the yearly or even over a decade. It's generation to generation to generation. It's internationally recognized. All of this being so important. And remember what I said about illiquid markets. Very illiquid. Like the physical precious metal is much more illiquid than the paper. Different scenario. Same with multifamily real estate. If you're buying a property that costs, $50 million, it's a lot less liquid. Why? Because there aren't as many buyers. It's the same with art. And that's what's happening right now today. And we must remember that when we enter times of crisis. Look, this is real detailed stuff. I hope you appreciated it. If you did, hit that thumbs up button. I want to thank you for watching. These type of videos are different than my daily ones, but I know that that's helping you along with your journey. So if you want to stick around, simply hit that thumbs up button so the algorithm notifies you next time around. I'll see you on the next one. Take care.